Hey, this is Matt from InvestiQuant. Today is Monday, December 14th, 2020. This morning we had a strong open that took off to the upside until we had news come out from Mayor de Blasio saying that we need to be prepared for New York to do a complete shutdown. When that came out, the markets reversed and started trading lower. And I figured what we would do this afternoon is take a look at this type of pattern that we have developing this morning and into the afternoon session, where we're seeing weakness happen. However, we're still above Friday's closing price in the majority of these instruments. So Friday's closing price is this cyan dashed line. So we are trading weak relative to our intraday price action here, but we are still above the close from the prior session. So let me hop into Discover and we'll take a look at what this has led to. We're going to be looking at all four instruments. We're going to use an intraday time-based entry towards the end of the session. So I'm going to use 3 p.m. Eastern time. It's going to be set up as a long that will exit at 4:15 p.m. Eastern time. For opening filters, I'm not going to use anything. I almost always pick something out of this, but by definition, the way I'm setting up this pattern, it's going to be an up gap anyway. So I am not going to use anything from the opening filter section. And the post-open filters, this is where I'm going to describe the price action that we've seen so far. So what I want to say is at 3 p.m., which is the entry time for this, we are trading below the open. So I'm going to hit close less than open in this intraday close versus intraday range. And then I'm also going to say that it's trading in the bottom half of the intraday range. So that is currently true everywhere. And then lastly, I'm going to say that at 3 p.m., it is still trading above the prior session close. So I can find that in the intraday close versus daily levels, and I can hit equals next to above prior close. So that sets up the price action where you're building out a red candlestick that is forming. You're trading in the bottom half of the range. However, you're still green relative to the prior day's closing. So we are still up on the session, but below the open with some weak price action. All right, lastly, I'm going to come into the indicators section and put it in a similar environment. Below a 10-day simple moving average, above a 200-day simple moving average, and then click view results. All right, and here we go. So these are the results based upon going long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when at 3 o'clock you are trading below the open and in the bottom half of the intraday range. However, you are still above the prior day's closing price. This is taking place below a 10-day simple moving average, but above a 200-day simple moving average. Historically, this pattern has 66 samples dating back to 2003 in the S&P. It's got 65 in the NASDAQ, 59 in the Dow, and 52 in the Russell. If we look at the win rates on this, the S&P is coming in at about 61%, so the S&P looks a bit stronger than the others. The NASDAQ coming in at 54%, the Dow 49%, and the Russell 56%. So if we look at all four of these as a group, they're just mildly favored. None of them are really weak, but none of them are super strong either. If we take a look at the average win to average loss, we can see average win to average loss pretty similar in size for the S&P, very similar in size for the NASDAQ. That is also true for the Dow, and in the Russell, the average loss just a touch bigger than the average win. So really, this pattern has been pretty neutral heading into the close. So it doesn't necessarily tell us to expect more downside, but it's not saying it's a strong reversal either. Kind of a neutral pattern as we approach the close. So hopefully you found that helpful. Good luck the rest of the day, and we'll see you tomorrow.